So many traders lose money because they don't understand market structure. When you don't understand market structure, you will be buying or selling, not understanding why you are buying or selling. In this video, I want to be taking out time to explain market structure to you very, very well. How you can map out, how you can understand your market structure. Because without the proper knowledge of market structure, you cannot be a profitable trader. You will keep getting stopped out because maybe you'll be buying or selling against the trend. Right now, let us go to the chart. Let me show you how to map out your market structure, how to understand it in depthly, and how you can use it to your own advantage to take trades, either a buy or a sell. Let's go to the chart. All right, good day guys, and welcome here on the chat. First off, I want you to know that if you don't understand market structure, you will keep moving in cycles as a forex trader. You will keep trading against the trend, and you keep getting stopped out, and you keep losing a lot of money on the market. Now, there are three different types of market structure that I will be explaining first of all before we head back to this particular chart right here. So before I do anything here on the chart, let me explain the three types of market structure that we have. By the time you understand this three types of market structure, be able to navigate the forex market with accuracy and precision. Now, we have the bullish market structure, we have the bearish market structure, and we have the sideways market structure. Now let me be using illustrations to explain all of this. Now, in a bullish market, you want to be seeing something like this: market creating higher highs, higher lows, higher highs, higher lows, higher high, higher lows, higher highs, right? So this is what we want to be seeing on a bullish market. When the market is bullish, we want to be seeing an uptrend. Okay, we want to be getting break of structures to the upside. So we have a break of structure at this point. We also have another break of structure at this point, another break of structure at this point. So all these break of structure to the upside, they are simply indicating the fact that we have buyers in this market. This market is purely bullish. That is why we have this trend. Okay, now this is how a bullish market looks like. We keep getting break of structures to the upside, getting higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, and higher highs. Okay, now let's go to the chart so that I will explain this properly. When I do the illustration, I will take you back to the chart and show it to you on the chart so that you understand it clearly. Now, when you open your chart, right, it should be so obvious when buyers are more plenty in the market and we are in an uptrend. It should be so obvious that you don't have to think about it twice to know that the market is in a bullish trend. So as you can see this trend right here, it is very, very obvious that this market is very bullish, right? Now I cannot start mapping out all the break of structures because we don't have all of the time. I don't want this video to be too lengthy, but let me just map out something from around here. Let me map out something from around here so you can see. Let me just start from here. This is a bullish trend. We have a break of structure here. This is the origin that caused the break of structure. We have another break of structure here, right? Now let me go back a little bit. We have another break of structure at this point, okay, and so on and so forth, right? This is a 4-hour time frame. If we go down to the 1-hour time frame, you will see so many break of structures. Okay, I don't want this video to be too lengthy. That's why I'm just trying to point out the few break of structure that are so obvious. Now we have a break of structure here, we have a break of structure here. If I open all of these candles to 1 hour to 15 minutes time frame, you will see so many break of structures that happen inside all of these trend, but we don't have all of that time. Okay, so in a bullish trend, we want to be seeing break of structures to the upside. Please get that right. Now let's go back to our illustration. The next type of break of structure, market structure is what? Is bearish. We have the bearish market structure. Bearish market structure. Now, in a bearish trend, we want to be getting a movement like this, something like this: lower highs, lower low, lower highs, lower low, lower highs, and lower lows. Right? We want to be seeing break of structures to the downside. Now we have a break of structure at this point here. We have another break of structure at this point here. Okay, and then we have another break of structure at this point here. So in a bearish trend, we want to see break of structures to the downside to indicate that sellers are more powerful and active in the market. Okay, now let me also explain this sideways so that by the time we go to the chart, we will not have to come back here again. Now in a sideways market, this bearish market structure is just the opposite of the bullish market structure. Now in the sideways, I want to focus on this a little bit because so many traders used to get stopped out because of this not understanding this sideways market structure. Let's say we have a support level here, and then we have a resistance level here. Okay, now by the time market is moving in a pattern that, let's say, market moves from this support level like this, like this, like this, and then it came back, break structure to the downside, and then it came back to this point, and then still went back up again. Right? This is kind of messy. Okay, let me clean this. Let me just do it this way. We have market moving from this point to this point, back to this point, up to this point, to this point, to this point, to this point, to this point. This is what we call a sideways market structure. That means that there is no specific direction or a particular trend or particular direction that the market is moving in to indicate if buyers are more active in the market or sellers are more active in the market. So when we have this kind of structure, that is what we call the consolidation kind of market structure. And this is the kind of structure that I always avoid as an SMC trader, because for me as an SMC trader, I need the market to either be bullish or the market to either be bearish before I can take my trade. Now let us go to the chart so that I will explain this properly. Now let me see. Okay, I have a good example here for sideways market structure. Okay, let me zoom this out. Now this is it here. Let me use it as an illustration right here. We have this market. Yeah, let me zoom this out. Let me zoom this out so that you see it clearly. Okay, right. Now we have market at this support level here. For those of you that are hearing the word support first time, support simply means that point in the market where that point where market will get to, and then it will stop selling and then it will start buying. Just understand it in that simple concept. And then resistance is that point in the market where if the market gets to, it will stop buying and it will start selling. Okay, more of like let's say an obstacle for buyers to continue buying. That is what resistance is all about. And then support is all about an obstacle that stops sellers to continue selling, and then buyers push the market to the upside. So this kind of market right here is what we call the sideways market. Market is not moving in a particular direction. It's just moving from here to here to here to here to here to here. Okay, Now, in this kind of market, like I told you guys, uh, I always advise traders, not just SFC traders, to stay away from the market. Whenever the market does not have a specific direction, it's not advisable for you to be trading, because market can be using you as liquidity at either in the support zones or at the resistance zones. Okay, until we get a breakout, out of either this resistance or this support level, you are not supposed to take any trade. Be very, very careful whenever you see this kind of trend in the market. Okay, now that we have explained the three types of market structure, now um, how do you use these structures to your advantage? First of all, I want you to understand something. There's what so many traders do, that they always trade in against the trend. Let's say the market is buying, you can see the overall trend is bullish, and then you see a trader trying to sell the market, or the market is bearish. Obviously, market is selling, and then you see a trader trying to buy the market. So whenever you are doing the opposite of what your market structure is telling you, just know that you are putting yourself in a position to lose so much money. If the market is buying generally, you should position yourself for buy only. And if the market is selling, you should position yourself for sales only. So now that you've understand the three types of market structure, I want to explain something to you guys. A very simple concept. Okay, I'm coming. Let me remove this. Okay, so this is how I approach the market, right? Let me teach you something still in alignment to understanding of market structure. When I open my charts, I always start reading my market structure from the daily time frame. Okay, let me delete this as well. Please, I hope you are understanding these tutorials. If there's anything that you don't understand, please just do well to drop your questions in the comment section. I'll be right there to answer all of your questions. I mean all of your questions. Okay. Now, I always look at my market structure from the daily time frame. Now, by the time I go to my daily time frame, I want to know what is really happening in the market. Now, from what you can see right here, it is obvious that the market is very bullish. Once you open your chart as a forex trader, the first thing you're supposed to do is to look out for the market structure. Know where the market is coming from, where the market is going to, before you start thinking of placing buys. So generally, I want to say that the market is bullish. Okay, then the next thing I want to do is that I will look out for the last three candles on a daily time frame. Now, the last three candles, apart from the current one, and then you will see that this candle is telling that the market is actually bullish, very, very bullish, because I have this large bullish engulfing candle. I also have these other candles. There is pressure showing that sellers were trying to push it downward, but this current candle right here is pushing to the upside. Now, by the time I see this, that the market is generally bullish on the daily time frame, that is where I will now start refining my structure to the 4 hour, to the 1 hour, to the 15 minutes. Now, I did a video where I was explaining my strategy, how I used to read the market, how I do my top-down analysis, how I execute my trades using market structure. Now, the strategy I trade, it gives me an edge, because I always take my trade in alignment to the market structure. So if I don't understand the market structure, I cannot take any trade. That is why I avoid consolidations market or sideways market. So if you want to watch that video, just do well to check out the link in the description box or in the comment section. I'll be dropping the link to my strategy and how I trade it in the comment section. So do well to watch that video. I actually referred so many people from that video to come and watch this particular video of market structure, because if you don't understand how to read the market structure, you will not be able to be profitable. You will not be able to execute good trade, or to even take long-term trade. Be you a day trader, be you a swing trader, be you a position trader, you need the knowledge of market structure if you want to be a profitable trader. I just hope this video gives you value and it was able to make you understand how to read the market structure, how to understand when the market is bullish, when the market is bearish, when the market is sideways, and all of that. Do well to like this video, subscribe to this YouTube channel if you are just seeing this face for the very first time, and ensure that you subscribe to this YouTube channel so that whenever I post educative content like this, you will always be the first to get them. If there's any video you want me to do, if there's anything you want me to explain, just do it to let me know in the comment section, and I will be down to explain and teach you anything you want to know for free. Okay, do well to join my community of forex traders on Telegram and on WhatsApp, where we drop trade setups and ideas, trade signals, and all of that. It's a community of forex traders. I'm not the only trader there. There are so many traders there that you also learn from, and you can also copy their trade. So see you guys in my community. I love you guys.